So in this video, I'll be talking about my M1 portfolio update. Now, if you've been following my channel for a while, you know that I started a M1 portfolio in January and I started investing around $5 per day for 5 days, to represent the 5 working days in a week. And the whole idea behind this was that most of us, well, I don't really drink coffee, okay, but most people in general, they spend a lot of money on coffee on a daily basis. And sometimes some people spend up to $10 per day on a cup of coffee, maybe 2 cups, maybe 3 cups. Now, the thing about this is that, yes, we all get value from something. And obviously, you have to pay generally to get a value from that thing, especially when it comes to being on the road, needing that, caffeine to stay up with your work or something that you may be doing. But the point is this, okay? The point is this. Now, if we could think about the amount of money we spend on those little things like a cup of coffee, and we could just, put it together and invest it, what are the possibilities? Like, what are the possibilities of that investment? And what are the chances that investment would turn out to be something great? Or how high or how much of this money can we really put to the side and just invest and just let it work for us and see what it turns out to be? And that's exactly what I started doing in January. So for the past, how many months now? 9 months now or so, I've been putting this $5, every day, which in this case, in every by the end of each week, I was investing around $25. And I think right now it's up to $30, per week invested automatically, all right, using this M1 portfolio. Now, if you haven't started your own M1 portfolio, use the link below. You would get $20 once you invest about $100 into your account. And that is, that is 20% up already by just, investing $100. So yeah, think about that. Do that. Use the link below and invest as soon as you can while this opportunity is there. Mind you, this is even the best time to start investing because the market has taken a dip. And yeah, we always want to buy low, sell high. Well, if you ever sell, because I don't really try to sell, to be honest. But here's the thing. I started this account and I remember as of last week, all right, this portfolio crossed the $1,000 mark. And I was actually going to make this video last week, but I was busy with work. I had to, I had to go back to work, and I usually just make this video when I'm home. So I'm going to put a screenshot up to show you exactly when it crossed that $1,000 mark, and I was 30% up in the portfolio. Since last week, the stock market has taken a dip, but that's not something that you should worry about. And this is exactly why you should start investing as soon as possible. Because you see, over time, the stock market would return around 7% per year. And if you can always just silence the noise and just focus on passively investing, you will just be fine. Now, I am not the type of investor that selects individual stocks, and I do few individual stocks personally, but I wouldn't really encourage, even myself. I don't even encourage myself to do it because if I'm doing that, I'm taking a very high risk, and I'm not a professional trader, and I do not look into the valuations of every company, and I'm not really keeping up with all the news that is developing, and I don't sit on my computer each day to find out what the latest updates are. I wouldn't really recommend, other people doing the same thing because, yeah, you might get lucky to make a few bucks here and there, but over the long run, you stand a chance of losing a lot more money because if you get into the wrong kind of companies and you go heavily on them, then you may end up losing tons of money. So my own strategy is to find index funds, mutual funds, ETFs. Those are the ways I would recommend to invest, especially if you're new to investing. That is even more important because you don't want to go pick the company that is, doing so well, and then all of a sudden it crashes, and then now you're discouraged because you think, well, it's all a scam. It's not a scam. It's just all about, understand that there's always risks and there's always rewards. So the more risk you take, the more likely your rewards would be. And obviously, the more risk you take in, the more your losses could be also. So you have to be ready for those things to happen, if you're investing. Just like starting a business, you got to know that you could fail. Just like starting YouTube. I mean, I feel like I'm failing on a big level, but it's okay. But back to the point, all right? So as of today, which remember the, what do you call it? The Dow just dropped around 600 points, 650 points, something like that. The M1 portfolio is down from that 1,000 high mark to around, I'm going to pull it up now. I'm going to put a screenshot up as well. 965, all right, $965. And yeah, this is exactly why I'm making this video, because you see, you need to understand that once you're investing, you will be open to such, downtrends and upswings and downswings that you would have in any form of investment. Whether you are happy today doesn't mean you will be happy tomorrow. Just like how sometimes you have a good day, sometimes you have a bad day. It's the same thing. But obviously, the human part of us doesn't want to see our value of money go down. And that's why we get discouraged from investing, because we think, well, I'm losing money. When technically you're not losing money, it's just a bad day. Bad days happen to everyone. The stock market just had a bad day. And actually, the bad day is when you find the most value in the stock market. And this is exactly where you need to then focus your mind and retrain your thinking and your thought process. Because you see, every extra money outside of my emergency fund, all right, which that's a different topic for another day, is invested, because at the end of the day, days like this will, bring more value. You are able to buy more shares of a company. You got to think about it this way. Imagine this was gold, all right? Imagine this is gold. And I tell you that this gold today is worth $1,000, but tomorrow it's going to be worth, $2,000. What would you do? Would you do everything you can to acquire this gold from me today for $1,000? I'm sure you would, because tomorrow it's going to be $2,000. Now, the thing about the stock market is we're not certain that it's going to be $2,000 tomorrow, assuming this is a stock of a company that is selling for $1,000 today. Tomorrow it could be $500, but then tomorrow it could be $2,000. And yeah, the point now is, what is this company doing? Is this company doing the right thing to set it up for a gain or value to, is the company doing the right things for the value of the company to increase by tomorrow? And that's where you as an investor comes in. If you think this company is likely going to be performing well, even looking going forward, then that means you should be buying it. If you think this company is not really something that you believe in, then you shouldn't be buying it. Now, mind you, you will be wrong sometimes, and you will be right sometimes. And it's not like gambling. Don't think it's like gambling. There's a little bit of, some factors that are beyond your control, like political tensions and, wars and, all those other things that are outside of our control. But in general, there's always some form of speculation and some form of knowledge of information that goes into, the ability to predict what's going to happen to a stock. But that said, that's why I recommend index funds, mutual funds, ETFs. You never have to worry about individual companies. You worry just about looking for the fund with the least amount of expenses, but with a lot of profitability in terms of the performance of the fund. And if you can find those kind of funds, well, just put your money in there. 10% returns, 12% returns, 7% returns is a lot better than losing your money. And that's what I would recommend to you. So again, if you haven't opened your own M1 portfolio or Robinhood portfolio, you can use the links below. And like I said, with M1, you would get $20 if you invest around $100 into your account. And that's just, for a start. So I hope you found some value in this video. I hope that you have subscribed to the channel if you haven't. So do that. If you haven't subscribed, give this video a thumbs up. And let me know your thoughts in the comment section below. Let me know what you think about, investing this $5 per week. Do you think it's something good? Obviously, we know that over time it would perform well, but do you think it's something interesting, to see that little bits of money could add up to be something significant over time?